Today we're going to be talking about none other than legendary investor Michael Burry's 13F filing. For those of you who don't know, the 13F form is a quarterly report that must be filled out by all institutional investment managers with at least $100 million in assets under management. Michael Burry's fund is currently estimated to manage just under $200 million, and of that $200 million, $52 million of it falls under the 13F filing. So in this video, we will take a look at the moves that Michael Burry has made over the last quarter. So if you enjoy, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. Before we jump into everything, I want to discuss the type of investor that Michael Burry is. This is important to keep in mind as you're watching this video because you need to understand how you are as an investor and compare that when you're looking at some of these other investors, because what they are doing may not necessarily be right for you. And in terms of Michael Burry, he is a lot more of a 6 month to 1 year type of trader. And by 6 months to 1 year, I mean his time horizon is very short. He will buy into positions and then sell them 6 months later. He will buy into positions and sell them 3 months later. Oftentimes, he will not hold positions for a very long period of time. He's not looking 3 to 5 years out. He's looking at macroeconomic conditions that could affect companies in the short term and then making trades based on those conditions. And you can even see this when you look at his portfolio. Out of all 10 of his positions, he made moves in 9 of them. There was only one position where he did not make any move in, and he actually added 5 of the positions this quarter, reduced 2 of the positions, and then added large chunks in another 2 positions. And that doesn't even include stocks that he sold completely out of, which was a total of 11 positions, including stocks like Citigroup, Block, Advanced Auto Parts, and BP. Let's start by taking a look at 2 positions that he reduced his stake in. This includes JD.com as well as RealReal Inc. For those who don't know, RealReal is an e-commerce brand that sells high-end clothing. Year to date, the stock has performed relatively well, up 34%. And that's despite lackluster growth on their top line. Over the course of the last year and a half, the revenue has been relatively flat. It peaked in 2022 at around $0.6 billion and currently is sitting around $0.56 billion for the trailing 12-month period. In their most recent quarter, they did see 10.7% growth year over year. However, the comp is from one of their lowest quarters since 2021. However, they do appear to be getting closer to profitability. This time last year, they were losing $2.12 for the trailing 12-month period. That has since declined to around 91 cents of losses for the trailing 12 months. And in my opinion, I think this is likely Michael Burry locking in some gains. We could see how he's built out this position over time. Back at the start of 2023 is when he first started buying into RealReal, and he built out a position of well over 1 million shares in the company. However, by the second half of 2023, he ended up selling out of a large portion of those shares and then continued buying back in 2024. And once the stock ran up in February, he likely looked at that move and saw the gains that he had on this position and has decided to lock in some of those profits. I don't believe Michael Burry has been as lucky in his position in JD. Year to date, JD is up around 3.5%. However, Michael Burry has built this position out over the course of a number of years. And if we look at the 1-year chart, the stock is down over 15%. And over the course of the last 5 years, this stock is down around 2%. JD is a Chinese e-commerce company. And with the weakness we have seen in China, it's no surprise that their revenue has been relatively flat since 2022. So over the course of the last 2 years, they have gone from $156.7 billion of revenue to $153.8 billion of revenue. Over the course of the last year or so, their EPS numbers have been relatively flat. This time last year, they were putting up $1.97 of trailing 12-month EPS. They did see a very strong quarter most recently, putting up $1.13 of EPS, bringing their trailing 12-month EPS to $2.76. However, this is still down significantly from the pandemic highs of $5.10 of trailing 12-month EPS. And it seems to be a trend for Michael Burry that he's selling at a loss on JD. If we look back in 2022 when he started building out his position, he bought 250,000 shares over late 2022 and early 2023. And he sold completely out of the position in the middle of 2023, likely at a lower price point than where he was purchasing the shares at. Over the next 3 quarters, he bought back in and built out a position, and now we're seeing him sell out again, likely at a price that's lower than where he was buying at the end of 2023. However, this likely may still be good timing for Michael Burry because it was just announced that Walmart is looking to sell out of a portion of their stake in JD, and this announcement sent the stock down by almost 10% after hours. Now let's talk about 2 positions that Michael Burry added to, which include Baidu and Alibaba. Baidu is a Chinese internet company that specializes in the search engine market, and so far year to date the stock is down around 24%. And Baidu is going through a similar trend to what we saw with JD, and that's because again it's a Chinese-based company, and with the Chinese economy in the position that it currently is, a lot of these companies are struggling to grow on their top line. If we look back at 2022, they peaked at a trailing 12-month revenue of $19.7 billion. It has since declined down to $18.78 billion. For EPS, we saw a massive drop-off for Baidu in early 2022 and throughout the middle of the year. However, more recently, we've seen the numbers level off. They're sitting at a trailing 12-month EPS of $7.51. This is still down significantly than where we saw it in 2021 of $21.22, and it's even down from pre-pandemic levels of 2018 around $13.30. And this appears to be a position that Michael Burry is building out over time because he bought 40,000 shares in the first quarter of 2024 and then another 35,000 shares in the second quarter. Another position that Michael Burry added to was Alibaba, and currently this position makes up over 21% of his portfolio, and year to date the stock is up around 8.4%. However, over the last 5 years, Alibaba has fallen over 50%, and Alibaba has held up a little bit better than the previous 2 companies that we have looked at out of China. They did peak at a trailing 12-month revenue of $134.5 billion in 2022. That has since declined down to $131.5 billion in the most recent quarter. However, 4 out of the last 5 quarters have shown growth year over year, with the only quarter shrinking in the last 5 quarters only decreasing by 0.5%. EPS was trending in the right direction. It went from 92 cents in 2022 back up to $7.13 of trailing 12-month EPS. However, more recently it's actually fallen back down to $3.86. This is down from their all-time high of $9.37 of trailing 12-month EPS achieved back in 2019. And Alibaba is a position that Michael Burry has built out over the last 2 years. He originally bought 50,000 shares in the fourth quarter of 2022, followed by another 50,000 shares in the first quarter of 2023, which he ended up selling out of his stake completely in the middle of 2023. However, over the last 4 quarters, he's bought into the stock and averaged his position over time. And likely this is a play from Michael Burry on China turning around their economy, and the current valuations of Chinese companies are sitting extremely low. Forward PE ratios as of February 29th of 2024 were sitting under a 9, compared to the US market at that time was trading at a 21.1. The final company I wanted to talk about in this video is a company that goes by the ticker symbol 4, and Michael Burry added this position this quarter, and it makes up 14% of his portfolio. And they are actually a payment processing company for a lot of top brands across the US. Despite the current weakness in the general economy, this company has been able to grow their top line revenue by anywhere from 20 to 30% over the course of the last 2 years, and their current trailing 12-month revenue is sitting at $2.9 billion. And ever since the second half of 2022, this company has been profitable on a trailing 12-month period. Their current trailing 12-month EPS is sitting at $1.69. Year to date, 4 is up just under 8%. However, over the course of the last year, it's up a more impressive 46%. However, from its all-time highs achieved back in 2021, the stock has fallen just under 22%. And Michael Burry just started building out a position in this company, adding 100,000 shares in the last quarter at a potential price of $66 per share. Overall, if you look at Michael Burry's portfolio, it seems like he's betting big on China and a turnaround in that country. And personally, I do own shares of Alibaba, and I agree with this thesis. I think that Alibaba and a lot of these Chinese companies will do well once the Chinese government takes some steps steps to potentially lower interest rates and help boost their overall economy. But remember, don't buy a stock just because I talked about it here on YouTube. Do not buy a stock just because a super investor bought into it. Make sure you are purchasing companies that meet your risk tolerance as well as your time horizon. With all that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, what kind of bagel can travel? Check the comments down below for the answer. Thanks for watching.